Michelle Snyder is with us, the Market Gauge Group Managing Director. Michelle, whatever's going on the inflation front, the market seemed to sort of weigh that with its impact on the economy front and the recession. And we seem to be poised to be looking at a recession, at least by the classic definition of two back-to-back contracting quarters. The administration is widening that definition because there are other definitions. I know the separate august committee weighs in on this sort of thing, but others point to the strong backdrop of job growth and the rest that at best it would be a mild recession. Where are you on this?
Well, actually, I was applauding this comment because I've been sort of saying that all along, that we have the textbook definition. And yet the reality is there are pockets of the economy that aren't doing too poorly, labor being one, although we do have that sort of conundrum between market participation or labor participation, jobs that are available to the tune of over 10 million, and then the actual jobs rate. And of course, lots of corporations starting to let people go. But also the housing market, even though people are calling for some kind of housing market crash, we certainly don't see that happening. There's been a softening, but inventory is still really, really low regionally throughout the United States. So yeah, I think we're not going to go into the deep, deep recession. And I do believe that inflation is basically taking a pause and getting ready to rear its ugly head again. And so that puts us back in, Neil, stagflation, which is really where I think we're going to be for a while.
So we have I guess what you're saying, we have a much higher level from which to come down than we certainly did in the 70s. There was very little wiggle room there in terms of a strong labor market that would eventually peter out to become a contracting one. Jimmy Carter did not enjoy an environment like that. This president, for the time being, does. Now, many Trump loyalists will say it started with President Trump and this guy's taking credit for it. Be that as it may, when you have 372,000 jobs added to the economy in the latest month, you've got a lot to work from and a lot to go down from. And I'm just wondering when that really accelerates, because that's the argument, that when things start to slow, they really start to pick up and slow. You know what I mean? And then everything hits the fan. Are you in that camp?
Well, we saw jobless claims go up a little bit, but I don't know if I necessarily think that we'll have any big drastic changes, because the whole psychology of the labor market has changed. Basically, the pandemic brought a lot of people working from home. People are quitting jobs in the face of higher prices, which is baffling, but it's a trend to consider. And yes, even though we're seeing some softening in terms of corporations hiring going forward, and that could certainly be more of a case, I don't know if I'll see, if I'm thinking really big numbers either way in terms of the jobs. I think the bigger thing for us to focus on right now is really what happens, and Steve was talking about this a little bit, with Fed policy going forward, with government spending going forward, and how much disconnect there will be between those policies and the reality of the fact that we could still see oil prices explode. And right now what we saw yesterday was a bottom in the gold market, and now gold is starting to rise, copper is starting to rise. So at what point does that really start to roost badly on terms of the whole equities market after this nice little pop from the lows?
But you still have concerns that whatever we're going to call it will be a slowdown, right? I mean, the only argument here is just how much of one.
Exactly. Stagnation. I mean, really, basically, we don't have a big slowdown to go, but we certainly are not seeing any great growth. So that keeps us sort of flatlined for now.
All right, Michelle, thank you very, very much. Michelle Snyder following all of that. And again,